What's up guys, Trader CJ from Cross Capital. Now today I want to talk about economic calendar or news events in the market, even public holidays, when the market is open, when to expect some movement in the market. So I want to help you guys where to look at and what time to look at the market, to look for those specific events, and it's extremely important to be wary of that. Otherwise you're going to get caught in some trades and you might hit your stop loss or something like that. So the first thing you want to look at is a economic calendar. The one I use is Forex Factory, very reliable, and there's some great information on this. So you can see in the top middle there is calendar. If you open that, or there's a front page, is the main page. It will open your on Monday 4th of December. It will show the events, the news events for today and the specific currency it will affect. This is the impact it will have on the market. So when it's red like this, it's extremely important to watch for those. So the ones I normally look at is the ones in red, and I look at the currency that's going to be affected and at what time. So you can also change your time on this at the top here. You can change it to whatever time zone you are currently in, but when you in the US time zone, it will be this Eastern Central Time. Just save that and you will look at the market. Okay, so I just want to show you an example. So sometimes so how the market moves normally is they forecast a certain number. They have the previous number from the either it's previous month or week or year. They have this number, for example, this 2.8%. It's factory orders month on month. So last month it was 2.8%. Now they have forecasted to be minus 2.7%. So how it affects the markets is you can see it's going to be either above or below this forecasted number. So I want to actually show you an example, and I will show you what's the effect in the market. So let's move back to this one, this Swiss franc currency that's been affected. This is CPI month to month. The forecast was 0%. The previous was 0.1%. So the actual number that came out was minus 0.2%. So you want to see how it affects the market. So the market actually priced in this 0%. So it's going to be fair if the actual comes out exactly the same as the forecast. The market shouldn't move theoretically. So when I open this detail, I'm going to show you this. The actual greater than the forecast, it's good for the currency. So because this number was less than the forecasted number, it's going to be bad for the currency, bad for the Swiss franc. So anything that's related to the Swiss franc or the pair that's related to the Swiss franc is going to be, the market's going to be moving at this specific time. So exactly at 2:30, this number comes, the actual number comes out, and it can either be above or below the forecast. So if it's going to be above this forecast number, it means that the market isn't priced correctly, so it's going to move either up or down. Okay, you know which direction it's going to move. So when this number comes out worse, so it's the actual is then less than the forecasted, so it's pretty bad for this currency. So I want to show you on this market. So I'm going to open trading view here. I'm going to open the Swiss franc. So let's look at this Swiss franc Japanese yen. I'm going to open this. So at 2:30 this number came out. You can see how the market dropped. This specific pair, the Swiss franc against the Japanese yen, so it was bad for the Swiss franc. So the Swiss franc lost its value. That's why it came down at 2:30, exactly 2:30. The market dropped. Now it isn't always easy to catch these type of moves because you won't know which direction the market's going to move beforehand, but at least you know fundamentally it is not priced correctly at this, because if it's priced at 0%, the market should stay exactly where it is. But because it's weaker or bad for the market, for the Swiss franc, so it's coming down. So it's supposed to be, for this whole afternoon or morning session is gonna actually drift down, so you can actually wait for a bit of a pullback into this fair value gap here on this candle, and maybe go for a short, and then hopefully there's some drift, the market's drifting down like this. It is possible to actually put in orders both sides, put in buy stops, but normally you get slippage on the market. So because of this high volatility zone, or high volatility at this 2:30 time period. So, but now you know why the market is moving at certain times. So now the next event is this 6:30 event on the British pound. It's going to move. The euro is going to move at 9 AM Eastern Central Time. ECB President Lagarde is speaking. And now also a bit later today you can look at the Aussie currency cash rate, RBA rate statement. These numbers are coming out, so it's going to be, so if you are in a position, a high leverage position, or in a position and you don't want to be involved in that volatility, just get out before that specific time the market's going to move. So you can actually open this calendar for the whole week. You can see these are the news events, like on Tuesday, ISM, services PMI, the job openings on the US dollar, and also affects everything that's US related. So for example, the S&P, the Nasdaq market's also going to move at that time period. So also Wednesday, pound again, USD 815, the ADP non-farm employment change, that's the number. Go into this detail. Actual greater than a forecast is good for the currency. So you can again look at that 8:15 Eastern Central Time. You're going to see the market's going to move. And then all the way down, you can look at all the unemployment claims on Thursday, and then Friday it's non-farm payrolls. That's every first Friday of the month. You can see there's a big news event coming out, but because there's a couple of things that's coming out at 8:30, 1, 2, 3 of these news events, and it's different numbers. So sometimes this one is greater and this one is less than a specific forecasted number. It can balance out a bit. That's why you get up and down movements in the market. So just be careful around these times. And yeah, you can also watch for, like this specific day, it's Italian bank holiday. It's affecting the euro currency. So you can see when there's a US holiday or a London stock exchange, the London market's going to be closed. So those type of things, you can just watch out for this. Go to this website, Forex Factory, you can check it out. It will help a lot. There's other websites you can use as well. Economic Candle, tradingeconomics.com/calendar. You will see the numbers here as well, but sometimes it's a bit overwhelming to look at all these type of currencies and news events coming out. You don't know what's important, what's not. That's why I prefer Forex Factory's website, because they just highlight these important numbers to you. Say investing.com, also very similar to Forex Factory. Also you can see the impact on the specific markets. You can check it out. Alright, and yeah guys, that is it from my side. So I hope you guys understand why the market is moving at certain specific times, and just be careful for that. And you can also trade around it if you want to. If you prefer the volatility, there's some nice entry and exit levels you can get around that. Alright, so let's see how the Swiss franc against the Japanese yen plays out for this specific day. maybe there's, let's say for example, you saw the news coming out, you went in short around here, bad entry for example, you can still have your stop loss above here, this area, on a higher time frame, and you see there's a bit of a break, and you can watch for the lower levels in this market. So this level 167.4, it is a nice previous support level. So let's see how the market plays out in terms of this specific bad news for the Swiss franc. Alright guys, just one last thing, if you want to trade, you can check out a Funded Trading Plus, link in the description. Great funded company to check it out. You can get a account for example, this one is $500 for a 100k account, but you get 10% discount, and that's use the code CC10, get the 10% discount on this. You can still also obviously use Take Profit Traders funded company, use the code CC50. If you open that, it's this one here, use the code CC50, and you also get a free evaluation once you pass your first test account. And the accounts, the prices here, 165 per month, get 100k on this one, or even 180, get a 150k account. You can trade up to 15 contracts, but these are intraday, so if you want to focus more on the forex markets and want to hold trades over the weekend or over the overnight, you can actually look at Funded Trading Plus, this company. And also got Top Step Trader here. You've got nice prices on them, starting at $50 per month for a 50k account. So check it out, link in the description. Alright guys, hope this helps, and definitely check out Forex Factory and beware of those news events and trading hours in the market. Alright, see you in the next one. Cheers.